Business Connection's full-year headline earnings per share jumped 125% to 39 cents. Revenue grew 35% to 5.8 billion rand, and that bolstered by the acquisitions of the UCS assets and Kanoa Group and good growth from other divisions as well. Joining us for more is Benjamin Maphatlane. He's CEO of Business Connexion. Benjamin, thanks so much for joining us this afternoon, and congratulations on the numbers. I mean, they look certainly impressive. Looking at that revenue line up 35%, how much of it due to organic growth, so as a result of your divisions, and how much of it as a result of the acquisitions you've made over the period?
Thank you very much. I mean, if one looks at the whole Business Connexion group, every single one of our businesses except our technology business grew revenue. So our services business, which is a large part of our business, grew revenue by 10%. Innovation, last year it was a 417 million business. It grew close to about 496. So if one looks at it, it's been a combination of acquisitions, no doubt about it, and organic growth. But our core business have been able to grow. But what has been pleasing about this result is that every one of our key businesses have been profitable, including the technology group.
Mm-hmm.
Benjamin, what's pleasing to me is that having cut my teeth on the South African markets in the late 1990s and a little bit into the early 2000s, when everybody who had a computer in reception was listing on the JSE, that you've managed to, a few bumps here and there and a few stories going around a few years ago, but you've managed to not only stabilise your business and survive, but build on it. How have you managed to do that?
Well, I mean, if you look at the core Business Connexion, I mean, most of the time, our peers obviously and our business will be always been judged on the growth of the share price. But the fundamental core part of Business Connexion has been very much around the fact that we've been able to generate cash. So even during the tough times, ability to generate cash has been our biggest strength. And what is coming through with this result is the diverse earnings that are coming through, no doubt about it. We're getting quite a lot of diverse earnings, and we've been able to make smart acquisitions. The business that we've been able to buy in the last 12 to 18 months are solid businesses. If you look at the Kanoa Group, you look at the UCS assets that we bought out of the UCS Group, there's no doubt about it that those businesses have been very much run properly and strong management in place.
Mm-hmm. In fact, you've just acquired, made an announcement of the acquisition of Integrate. I mean, when it comes to your acquisitions, what do you look for? And in this case, what exactly is providing synergies for you?
Well, I mean, the Integrate business has been operating since 2001. It's possibly one of the largest privately owned IT managed services company on the continent. But if you look at Business Connexion stack, and we've always operated, is that we've always been very strong on the enterprise space. And the Kanoa acquisition allowed us to play very much in the small to medium size. Mm-hmm. And what has been missing in our stack has been very much what's called the mid-corporates. Those corporates that are just mid-market, just between the 100 to the 500. And the Integrate allows Business Connexion to play in a space that we haven't been able to do that. And from us going forward, we believe that we're going to be able to address the whole stack of the enterprise, the mid-corporates, and the small to medium enterprises. So from an offering point of view, well positioned. And if one look at the mid-corporates, those are some of the fastest rising parts of that. I mean, the enterprise, we all understand, they are very much affected by the economy and the slowdown in the economy. But meanwhile, those mid-corporates have been able to grow in tough times. Mm-hmm.
Benjamin, you're not going to ignore organic growth, are you, in favour of just an acquisition trail? I mean, I know you've generated 521 million in cash compared to the previous comparable period of 286 million. But, of course, very important from a corporate point of view to achieve two levels of growth, organic and acquisitive. Absolutely.
And I think, Lindsay, you're 100% spot on. I mean, we made quite a lot of investments in our data centers. Our data centers are very much part of our core strategy. We're possibly one of the few IT companies in the South African market, if not in the African continent, that has made massive investment and capital investment in terms of building data centers, in terms of growing them as well. And we still believe that a lot of the growth will come out of that. So if you look at the stack of enterprise, mid-corporates, plus SMMEs, there's a huge potential for Business Connexion to do cross-selling. There's some of those offerings that we can take into the small, medium enterprise. We can take some of those into the mid-corporates. And more importantly, we can also extend some of those things into a large enterprise. If you look at our Kanoa acquisition, which has been very much in the enterprise space, we're starting to see that come into fruition in terms of the profitability that's come through. Kanoa Group has always been in the SMME. We've now had an opportunity to address the large enterprise who are looking at the managed printing services. So our combination of our portfolio, our diverse geographical spread, definitely has put us in a very strong position. But there's no doubt our traditional business continues to grow, which is great.
When it comes to data specifically, I mean, data charges in South Africa have been exorbitant, and there's been a lot of noise made about us getting closer to the rest of the world. Where do you see costs headed moving forward? Because of course, one of the biggest challenges is broadband costs, and those still sitting very high.
There's no doubt, I mean, that we are lagging behind. If you look at some of the African countries that are actually having a high internet penetration, if you look at a country like Rwanda, for example, where they're rolling out a lot of optic fiber and making sure they can that. I still believe that in South Africa, there's a huge opportunity to bring down the cost of bandwidth, the cost of doing business. And I think that is an impediment for the growth of our country and innovation and bringing people into our country to do.
Do you see other African countries actually leapfrogging South Africa in that regard?
Absolutely. I mean, in some of the countries that we operate, like Kenya, for example, I think the ability for people to innovate, and you see a lot of innovation coming out of Kenya. And I think it's on the back of the fact that people are able to have access to cheaper bandwidth and they're finding innovative ways, because in those countries, they're not as resource rich as South Africa, but what they certainly have is the human capital. And I think for us as a country to move forward, we need to looking at the whole telco space. We need to make sure that we can bring the cost of doing business, because we're not the cheap